is not financial advice. In this video, I'm going to talk about the 8 stocks that are a buy at current market price, in my opinion. Currently, we are in a bear market, and for long-term investors, this is a great opportunity to buy some of the best stocks that are available in the market. In my opinion, investing in individual stocks is very, very risky, and I would prefer to have the 2x with low to medium risk than the 10x with very high risk. The first stock that I'm going to talk about is Google. It's currently trading at about $101, and I'm estimating $200 in 2026 January. That's about 2x in 4 to 5 years. Google has the search business, YouTube, Android, Google Maps, and also other bets. And this is a company that can grow in the double digits and has net profit margins close to 30%. So there's no better deal than Google. Number 2 is Amazon. It's currently trading at about $115, and I'm estimating that it could reach $240. That's about 109% gain. That's almost double your money in 4 to 5 years. And we all know Amazon has Amazon Web Services. We have the e-commerce business and also the ads business. AWS is growing north of 30% year on year and has net profit margins of 30% plus. And Amazon also has a strong e-commerce business that's growing in the double digits, and it has net profit margins in the single digit. But because of the volume, the number is going to be good. The third stock is Square. It's currently trading at about $57, and I'm estimating $188. That's about 230% gain. That's almost 3x in 4 to 5 years. Square has Cash App, which is very popular, and more importantly, it has a full ecosystem for payment services and merchants. With Square, we can expect double-digit revenue growth and more than 20% net profit margins. Number 4 is Disney, currently trading at about $98, and I'm estimating $170 in 2026 January, and that's about 73% gain. Disney owns OTT platforms, movies, cruises, and also Disney parks. We can expect double-digit revenue growth as well as double-digit net profit margins with Disney. Number 5 is AMD. It's currently trading at about $59, and I'm expecting a $150 price target in January of 2026. That represents 154%, which is a good return. AMD, as we all know, is taking market share from Intel, and they also have discrete GPU to compete with NVIDIA. And AMD has significantly less exposure to China, and its forward PE is less than 17, and you can't get that with NVIDIA. So AMD is a good deal in my opinion. Number 6 is Salesforce. It's currently trading at about $147, and I'm estimating $308 in 2026, and that represents about 110% gain or 2x in 4 to 5 years, which is a good return. CRM, as we know, has multiple brands like Tableau and Slack, and we can expect 20% growth rate in revenue in the next few years, and we can also assume 20% net profit margins with this company. Number 7 is Warren Buffett-backed Stoneco, which is a Brazilian fintech firm. Stock is currently trading at about $11, and I'm estimating $35 price target in 2026, and that represents about 218%, or otherwise 3x in 4 to 5 years. I have a lot to say about Stoneco, so I'm going to do a separate video about Stoneco. The last company that I'm going to talk about is Twilio. It's currently trading at about $69, and I'm estimating $177 price target in 2026 of January. That represents about 107% gain. It's about 2x in 4 to 5 years, which is a good gain. Twilio, as we all know, has clients across Fortune 500 companies, and it's a communication software company. Its gross margins are lower, like 50%, but its net profit margins are close to 10 to 15%. But I think Twilio would do great in the long term and reach that $177 price target. Personally, I do own shares of almost all of these companies except for Twilio. I've been dollar cost averaging into all of these stocks, and I'm anticipating an easy 2x in the next 4 to 5 years with low to medium risk. Since I pour thousands of dollars into the stock market and my personal preference is not to lose money, these 8 companies are great bets for me.